Oh, okay. Okay. Well, that's perfect. Have you taken any trades based on analysis that we've shared on the Telegram channel? Hello?
I didn't get that.
Have you taken any trades based on the analysis on the Telegram channel?
Yes, I think sometimes last week I did some of the trades and it was going well, like I was getting to understand. I also messaged you recently about if you are a long-term trader and you gave me a positive response on that.
Oh, yes, I remember.
Yes.
All right, okay, perfect. So currently you are focusing on taking some trades that are short term and also some trades that are short term.
Yes, please.
Oh, all right, okay, cool. Do you have any pair that you'd like us to go through it tonight in our session?
I find it difficult to understand the US 30, the 500 and the tech.
Oh, okay.
Yeah.
Oh, all right, okay, perfect. Okay, perfect. No problem. We go through the. You said this is USD what?
US 30, US 100, and the SP 500.
Oh, all the USD indices.
Yeah.
All right, okay, perfect. Sihle, how are you doing tonight? Also, we've got Sihle, into that session. How are you doing, Sihle? It's quiet. Hello, Sihle. Hello. Okay. Perhaps maybe it's got a challenge in the network side, but it's fine. It's fine. We're just gonna go through the session. Okay. Maybe we can get started on with indices, and then we can just go through in terms of let me just get started in the session. So tonight's session, it's mainly just understanding. We call it Money Monday, the market outlook. So we're basically looking at what is going on in the market. We're doing also the weekly analysis, and also going to be checking out even the weekly calendar in terms of what are some of the fundamentals, that are happening this week. Let's just go through them, because I know a lot of people will be like, no, I don't trade fundamentals. I only look at the charts. That's fine. Good for you. But you know what? You have to really check in terms of what's going on in the market. You have to also check what are some of the economic events that are happening, because those things, they do affect, they do affect the market. So you must make sure that you also go through them, so don't be like those people that are like, yo, you don't need to check those out, but actually you do need to check them out, okay? So for this week, from the 6th of November, for this week, remember last week, this was the first Friday of the month we had NFPs. So we're gonna have on Tuesday, we're gonna have the RABA, which is the Reserve Bank of Australia interest rate decision, expecting a hike from 0.10 to 4.35%. Remember last week, Fed, they did not hike, their rates, they kept them unchanged. And even their comments, where they were not so hawkish. I mean, they're not talking about raising rates further. We know they're going to have a speech. Looking at here at Wednesday, they're going to have a speech. Obviously, we're going to have German CPI, which is inflation numbers coming through, which is month on month for October. So it's basically comparing last month and to this month prices. That is inflation month on month, and you're going to have Fed chair speaking around 4:15. So basically, just talk based on what's been developing in terms of the economy in the US, and then 5:30. Obviously, always make sure you check your time zone, because we're trading the same market, but we trade it on different time zones. So that's something you should also Make sure you understand. And then you're going to have crude oil inventories. And we can see, okay, these are some of the previous numbers. That is on Wednesday. And then on Thursday again, around 9, you're going to have another speech, by the Fed Chair Paul, I think, going to be speaking. I think it's going to be based on those, initial jobless claim. So based on those claims, basically they're going to check, in terms of development, is there growth in the economy? Is there any improvement in the economy? Obviously, if there's improvement, they know that actually keeping rates unchanged is not really affecting much of the economy. But if they see that the numbers are dropping, that is where obviously they'll take a look. You know what? We need to review, our current monetary policy. And then on Friday, we're gonna have GDP, obviously from the UK. So this is year on year, this is month on month, and then this is quarterly, third quarter, and you can see the expectation of a bit, not much of a growth. So this week there's not much of in terms of fundamentals. So we definitely have to look at what the price is doing. Remember, when we are trading price action, it's very much to understand. If you're trading price action, you must understand why is the price where it is, and also where it will go next. Obviously, like I keep saying, the general indicator is definitely the price itself. You must understand what time frame are going to be trading. And I think we had that chat last week where we're talking about, okay, fine. For a long-term trader, you're looking at the higher time frame for direction and also for bigger patterns. But also, if you want to trade every day, you must also look at the patterns on your smaller time frame. Okay, so smart money price action reading, be able to read price, you must check whether where the decision made. So decision are made when the price changes direction, or if the price was moving in a not like a slow momentum, but suddenly there was a shift in the momentum, the price started moving aggressive, then okay, at that point, that is where the decision was made. Okay, and then you check, was there a clean supply demand zone? So you mark those levels. So when I say clean, I mean just a huge drop or a huge rise in the prices. And then you check, no clean supply and demand, it means that the zone is compressed, meaning the price is moving in a 45-degree angle. I'll explain that when we're checking out the charts, because that's what we're gonna do tonight's session. We're gonna be doing a weekly analysis. And then the price, it really shoots away from the zone. When I say zone, I'm talking about the supply zone, where there was a huge selling, or a demand zone where there was a huge bullish momentum when the price started going up. The zone itself reacts at the right place, meaning you mark on the charts if you saw a reaction or not. So those are very much important. Obviously, when you're analyzing the charts, it's very important to check what is the price doing now and how is the price moving to a zone. Okay, I think okay, not as yet, she did not ask me any question, only got a question from Ivy, so that's fine. So what you're gonna get started, or remember, we said when you're doing analysis, you must do something called intermarket analysis. So intermarket analysis means you do not only analyze, your indices, but you analyze your currencies. Okay. Firstly, what you normally do, I think you talk about US30, US SP 500, and let's get started with those. Okay. Are you still guys still with me? Are you still understanding everything we've been talking about? Remember, any point of time you don't understand something, just ask on the chat box. Okay. If somebody
I'm
lost, feel free to ask.
Yes, I'm here. I'm following up.
All right. Okay. Perfect. So what we can do is let's just go through the SP 500. Okay. So US30 is one of the indices from the US. So 30 meaning top 30 companies, different industry, not necessarily tech, but the companies that are in terms that are big, you know, in the USA. It's almost like you're checking out the economy of the country, which is USA. So 30 companies, US meaning for the US state. Some people call this a Dow Jones, and sometimes it's called the Wall Street 30. It's different on different brokers. So this is H4, okay? So even looking at this, we saw a huge movement. You know, I think this huge movement was pushed mainly when the interest rate did not change. Let me just quickly just check add a period separator so we can see in terms of daily movement. I'm gonna add this period separator. So we can see today, not much movement. Okay, not much movement today. The price has just been consolidating. Okay, Mobile is joining us. We just submit coming through. Not much movement today, but you saw on Friday after NFP numbers, so we saw the dollar dropping. So from there, and I think this was Friday, and obviously Thursday, we saw a huge movement to the upside on Thursday, which is pretty good. And from that, there was a bit of breaking out from that level over there. Let's just make that. Okay, so there was a break away from that zone, and obviously the price broke through this level over here. Okay, so now where are we in terms of price? What I like to do is when I analyze these pairs, firstly I go to the daily charts. You know, check out the daily. I'm like, okay, fine. Which levels are important? So I'm gonna mark that. Firstly, I change this to a line chart. So a line chart, I'm gonna get, you know, my levels. So I'm gonna mark this level here. So I'm just show you which level I'm gonna mark using this. Oops. Okay. And set. All right. So these are the level that I mark. You know, your highs and your lows. So those are level that I mark. What is going on with this thing? So I mark these levels. Just check. I'm showing you. Yeah, I think you guys can see. So yeah. All right, but this level that I mark. So I mark this level. So I mark that level. Remember, if you can see, I'm not sure why this thing is finished. Okay, no, let me use this. So this is a level I want to mark. Remember, this level was previous support. When it went up there, this became resistance, and then the price, looking at this, the price broke, you know, came back retesting this from this level becoming support. This level is another low, this is another low, another high. So I will mark these levels, you know, based on understanding the market structure. Okay, I'll show you what I mean by market structure now. So if a price break this level, more likely it's gonna retest the level below. And then let me mark also this level here. So this is the level that I'm marking here. So I'll mark this level, mark that level, and mark that level. Those are the levels that are important. So I mark them using a line chart. Okay, and then I switch back to a candlestick pattern. So I'll mark that level also, you know, and I'll mark that level. All right, so once I've marked my level, what I do is I change back to candlestick patterns. Okay, so from candlestick patterns, now I can see, okay, those levels that are marked. Okay, for example, just to see what decision were made, you know, from this level, this is obviously this is daily. People call this double maru or a railroad track. So we just write it down because we are doing a session teaching, but also at the same time we're doing analysis. So some people call this double maru bozu, or we can call it a railroad, just like a railroad where trains Yeah. The road that is used by train basically or rails in other countries. So railroad track. So you've got these two canvas. These two canvas. These are the railroad track. So after that railroad track, you saw a huge, from there was a touch, and then there was a huge movement to the upside, right? Okay. So from that level, there was a drop towards a railroad track, and you can see this pattern on my bigger time frame. So from here, there was a buy movement from the first push. So this was done after this candle here. First push, second push, third push. And after third push, you can see the price has reached this level here, which is your previous, I'm gonna check this out. I'm not sure why. It should allow me to. Okay, it's fine. It's 224. It's 224. I'm gonna use this. So this was your previous support. The price break a level, then drop, come back again, retest the same level. So now this is a flip. So this was support. Now this is resistance. The price drop below that, break from this level. So this is a base, drop, base, drop. Then the price come back again to the same level, which was your base. And now this is basically your flip, because let's just mark this as, if you mark this as your support, because I just need you to understand what I mean. So if you mark that as your support, so support meaning like your floor, where the price bounces from the floor, and then resistance is almost like your ceiling, so resistance where the price fell to reach a higher level, so it's like a ceiling for the price. So this is resistance. So it's the first time price is coming back to this level, resistance level, then again second time. Okay, remember, if you go check above, there is that level, there is that shooting star above there. So the shooting star is always like your supply level. So it's like a supply level. So just make this as a supply level. Remember, if the market has been moving upwards, meaning been moving very much bullish, it's gonna reach a point where these bullish momentum, or these buys, or this buy position, they need to be sold off. So that is basically that normally happens on this level. So I'm expecting my expectation on this, obviously, because what happened is first time resistance one, drop, and then what you see is something like a bigger M. Let me just move this. Okay, this. So showing an M, then from there, obviously, back to the previous level, then the price more likely to go further up there, and then a drop. Okay. So this, when I mark this is gonna be your R1. So this becomes R1 resistance number one, R1. So resistance level, R1 is this candle. And then you're gonna have resistance number two, which is this candle. Okay? Resistance number two, which is this candle over here. Okay? Resistance number two from that candle, right? But I am expecting the price, even if it doesn't drop towards the, but I'm expecting the sell to be there, because this is my supply level according to the pattern. Okay. Hope this is making a little bit of sense. I'm expecting R1, R2. So a lot of people, see a lot of people that have been got their stop losses around here if they've been selling. So if you're selling, you've got your stop losses there. The stop losses are there. And also you also got your buy stop pending orders. These are your breakout traders. Okay, so these are your breakout traders. So when you say somebody's is trading a breakout, it means if the price break above a level or below a level. You know, so you've got that over there. The stop losses, you know, over there, the stop losses just above this resistance. So people say, if a price breaks above this level, I'm gonna enter with a buy stop, buying going up. Also, if you've been selling, the stop loss just above your entry. So that is where you've got your stop losses. So this is liquidity that can be used for a price. When the price just, the bank, obviously institution, they can push the price up and then take out those buy stop, activates your buy stop, take out the stop losses, and then immediately drop the price towards this level. Okay. And then obviously from that level, they can definitely retest this level and push the price further up. Okay. So that is when they are selling. In this case, what they're doing basically, they're taking more take profits. And the price, when the price returned to this level, is because they want to enter more buy trades. They want to enter more buy position. So the reason they want to enter in a similar level is because they want to buy things in a similar price or similar zone. Sure, if I'm making sense. For example, because you're buying bulk, if the price, if you bought something here, right? And the price went up there, and the price, you like, you know what, for the bank traders, they want to buy things on the wholesale, which means a lot of it, they want to buy it cheaper. Okay. So the price will test at level and then a drop and come back, and they'll buy even more of USD at this level, the same level that they bought last time, you know. And they will not sell unless there are sell orders that are coming through. The sell orders, which means people must be convinced that this price is actually dropping. Okay, so they must be convinced that this price is actually going to drop. Without people being convinced for sell, they will not sell. Okay, so for example, for you to press that sell button, you need to be convinced that it's actually dropping. So when it starts dropping, that is where they can enter their buy position. Remember, they want to enter their buy position in the similar level like last time. For if they entered more buy, for example, 1, 2, 3, this was a huge bullish momentum, right? But this was done after this candle broke above this level, which is 32985 level. Okay, there was a huge bullish movement from there. Breakout, then drop, take out R1, R2, then drop, come back to the same level that they bought last time, and then they can push the price further up. Okay, remember, they cannot sell without having, if for example, for them to take profits from this from this buy position, they need to be huge people that are convinced that this price going further up, so they can sell their buy position for people that are actually buying. Not sure if I'm making sense. For them to buy, someone must come through and sell. For them to sell, someone must come through and buy. Okay, let me just, now I think I've explained it here. Now let's just use a clean chart just to analyze. Okay, so this is, let's changes again to a line chart. So we mark this level. So this here is, okay, because this here, our previous demand or previous support, price break, drop again to another level. So we're gonna mark that level again. Remember, I change the chart to line chart so I can mark the level. Okay, and then I mark that level also using this line chart, this line. So I've marked that level. I've also marked that level. If you can see, the price was in this level. When the price dropped, it broke, come back, retest similar from that level, price retested. First time, again, second time. And the price broke again from this level. Remember, Again, retest first time. Remember here, first time, and again here, second time. Okay, before coming back again. So expectation to do a mirror image from there to there. And remember also even above it, left something like a supply. Okay, drop again here, first time, break a level, go up, first time again, expecting the price to come back to this level again. So let me change that again into candlestick patterns. So my analysis is this here is where, because after that there was a huge selling, so this is my supply. Okay, and this is my R1. Okay, R1, and this is my R2. Okay, R2. Okay, and before, obviously, before the price can drop, it needs to convince people that it's still going up, and then it can drop and enter more buy position, and actually buy more, going further up. Okay, based on this, I'm sure you can see this pattern. If you understand candlestick pattern, this pattern here. Okay, I'm just gonna draw it for you. Can you see this pattern here? This pattern here. This pattern. This pattern here. If you recognize it, you can write in the chat box. Which candlestick pattern is this? Okay. This one. Okay. So price comes to this level, drop below this low, press a low, come back 1, 2, boom, come back here again because of this candle here. Now that is your expecting more buy. For them to close this buy position, some people need to go up. They need opposite orders that are going to enter, and the price can drop and buy more here. The price can drop and again further up. Okay. But let's take a look at what else is out there. I think this gold. Okay, let's just mute that. Okay, then the thing is done mute. Perfect. Okay, thank you. Thank you for doing that. We appreciate you. Oh, what happened? Okay. Okay. Let me just. Oh, sorry. I think I closed the chat. Okay, but otherwise, I am hoping you're getting a sense, in terms of how we, go through the charts and how we analyze the charts, Just resume share. So yeah, basically we're checking how is the price returning to the zone. So that zone can be a supply zone, can be a demand zone. We also look at the nearest flag. So where the price break a level and close below that level or above that level. So okay, no one is joining us now. Okay. Welcome again. Welcome. I think we've got Mr. Mieni in the house. We've got Nawal in the house, Sister Abi, and we've got Vivo. Okay. Welcome. Yeah. So basically what is important, what does the price action tell you? As the price tested the last flag on the approach, so it's a good sign. As the price compressed into a zone, it's also a good sign. Is there big news on the way? If you're checking a pair, it's very important to check that out. So let's go through again towards the charts. I think we're looking at the charts. So looking at this is what gold. Okay, we've done USD, so now we're doing gold. Okay, I think gold tested this level, and tested this level. This is 2008 US dollars. That's a big number. Okay, so when the price break a level, first I like to change this into your line charts, okay, so that I can mark this level. Which level am I marking? I'm marking the lows and the highs, because what I'm looking for, this is a low, this is a low, these are your highs that I mark, highs, so I mark those levels. Remember, when you talk about market structure, we're talking about if the price is moving up, you know, if it's moving up, which is doing that, mark that level. So we're gonna mark also that level. Okay, this is where the price reacted. Also here, price reacted. We're gonna mark that zone. So these are the zone we've marked. I'm gonna use this because that one is not giving me out. So we mark that level. We can mark that level. We're gonna mark that. This is R1, R2. Then the price move above that zone. The approach there, you can see it's not moving in a straight line, which means it's not aggressive, but it's moving now in some form of compression. So it's a good sign. Okay. Then the price, expecting the price to drop towards this previous level over here. Doesn't necessarily does it a lot of time, but based on what is happening in terms of interest rate decision, you saw that is happening in terms of the Fed not hiking rates, keeping them the same. Chances are they're more likely not going to hike rates. So, which is definitely good for gold. But let's just take a look at the charts. Let's change this to candlesticks. Okay. My expectation, okay, let me just put this back. Okay, the price, so there was a bit of compression here, and then we saw, for example, here building up orders, and then a huge candle touching that level, which is there. And you can see, if you can zoom in, you can see this is a bearish engulfing candle, and reacted right into it in the price drop. Okay, and the reason, because you can see there's a build-up of orders. When the price is touching these levels, these pins, some people, what are they doing? They've seen that the price is not breaking this level. So what they do is they put their stop losses here, and they put their stop losses here. So what the price will do when it gets to this level, touch, come back, and then break, close above it. I'm expecting the price obviously to drop below this level. When I talk about the flag, I'm talking about this. When the price does this thing, this is a flag. And also, obviously, this is because after this base was formed, we saw a huge bullish movement. And after this base was formed, we saw another bullish movement. Okay. But after this compression, I always expect the price to reverse a bit. Why? Is because the price cannot just go up, not all the way. For example, what I mean is, if you've been buying something, for example here, at some point they need to take profits. For them to take profits, the price is more likely, first of all, it's gonna do this, like consolidate, and then price will reverse a bit. Chances are 50% of the move. So what I do is, you can change this to a line charts. Okay, you'll take, for example, after you've been buying something, for example, been steady rides, you need to take profit. Taking profits means the price is going to reverse a bit, and it's right at the same time where we saw that bearish engulfing. If you don't know what bearish engulfing, this says bearish engulfing, where you saw a bullish candle and then a huge drop. So this bearish or drop candle, or this huge vector candle that is dropping, is engulfing that small bullish candle, that white candle, so the price drop right there, at the engulfing candle. So if the price has been rising, first push, second push, third push, okay, somewhere here you need to take profit from your position you've been buying. Take a profit means the price is gonna drop a bit. So if you use Fibonacci, you mark those two levels. Let me just move this. What you do, you take Fibonacci from the low to the high. A 50% is giving you this candle here, this base. So if I remove everything now, just so that we can, see clearly the price action. Okay, so we are marking two level. We are marking that level, and we're marking this level, and we're taking a Fibonacci from the low towards the high. So if a price is pushing back from that level towards the 50 level, we've got this base here. Okay, we've got this base here. Remember, this is a base which we call it. This is a rally. And then you've got this base and then another rally. Okay, remember, these were three pushes if you go on a daily. Okay, first push, second push, third push, and now we've got this consolidation, right? So expecting Tycoon, just when you're about to close the session. Okay, expecting the price to come back here, and then you can do a further, push up, up notch. I think that is what I see on gold. That is what I see on gold. And yeah, because I don't want to analyze, US indices only. Okay. Remember, this is gold. It's just that, but remember, if you are trading on H1 or H1, always make sure you that. Always make sure you also analyze the time frame you are trading from. Okay, that's very important. If you see, for example, here the price is gonna react to this level because the price obviously made a drop here, huge drop. Obviously gonna react to that level. This is H1. As much as you see that on a higher time frame, if you go on a higher time frame, that the price gonna drop because the price is still gonna push up. You can buy here. You can buy this level up to that level. And then the price start dropping again, you can start, making sell position, which means you analyzing on a higher time frame, but it also, because you're trading in a smaller time frame, always go with the trend on the time frame you are trading on. For example, you're trading 5 minutes and the price is dropping, always make sure you understand the pattern on the time frame you are trading on. That is very, very important. Okay, that is very important to see. Okay, a trend can be bullish on a higher time frame, but if on a smaller time frame it's dropping, make sure you sell. You don't go, you know what, I'm right. I think that is all I have for tonight. What I will do is, let's have some questions tomorrow. Write them down and we can address them on tomorrow's sessions. Okay. Have a good night, ladies and gentlemen. Yeah, that is all I have for you tonight.